Now, one of the biggest developments in this space has been the introduction of a new return, the Supplementary Annual GST return, which we are going to call, just for fun, the SAGA in today's session. So we'll start with you, Priyanka. Can you tell us a bit more about the SAGA?
Sure, Trish. The SAGA is the new GST return that taxpayers that fall in the public and multinational space that are qualified as top 100 and top 1,000 population will need to complete on an annual basis. It's aimed at collecting information relating to the investment that the taxpayer has made on their GST governance, as well as correct GST reporting. And what the ATO has told us is that they'll collect this information that they obtain through these annual disclosures and use that to effectively determine the scope and intensity of the taxpayer's next GST assurance review. So the SAGA will commence from FY25 for those taxpayers who have received a GST assurance rating in a report that was issued by the ATO on or before 30th of June 2024. For taxpayers who received a report that falls after this date, they'll need to commence lodging SAGAs annually from FY26 onwards. And finally, for those taxpayers who fall within the top 100 and top 1,000 population but have yet to be reviewed, will need to commence lodging annual SAGAs from the financial year that follows after receipt of a GST assurance report from the ATO.
So it's quite a complicated way to implement this new obligation. So, Mark, could you talk us through what are the key dates going forward and how many taxpayers does the ATO expect to lodge this in the first year, which is FY25?
Yeah, sure, Trish. So the due date of the SAGA depends on a taxpayer's financial year end, and it's generally at least 7 months after the end of the taxpayer's financial year. So the dates for FY25 are outlined on the slide. And notably, the SAGA for a taxpayer with a December year end will be due shortly on 21 August, while those taxpayers with a year end in the first quarter of calendar year 2025 will have a due date of 21 November 25. And they should have been notified of this requirement to lodge the SAGA on or around yesterday, this being circa 4 months out from the due date itself. In terms of numbers, the ATO is expecting approximately 450 taxpayers to lodge a SAGA for FY25, and those taxpayers were notified of this new return obligation in December of last year. Importantly, once a taxpayer is notified of the need to file, the SAGA is then legislatively required under Division 31 of the GST Act. And what that means is that penalties can be imposed for either late or non-lodgement, or for making a false or misleading statement in lodging the SAGA. And so to give it some context, for an SGE, the failure to lodge a SAGA could result in a penalty being imposed of circa $825K. Also, one question we often get asked, just for the avoidance of doubt, is the SAGA is an additional GST return that needs to be filed by impacted taxpayers, with their normal GST compliance obligations via the lodgement of their monthly return remaining as is. Finally, once the SAGA has been completed and is ready for lodgement, a declaration must be made by someone who's authorised by the taxpayer to do so. This could, for instance, be an appropriately authorised officer, or it could be a tax agent if applicable.
Thanks, Priyanka and Mark. I feel I almost understand when you might actually have to lodge a SAGA. But for a novice like me, can you actually then just tell me what the return covers? And also, what can taxpayers who are going to expect that they have to lodge this form, what do they have to do to prepare?
Sure. It's a really good question, Stuart. So I think, just to try to demystify it, the SAGA has essentially got 5 key sections. In some respects, it differs from other tax returns by requiring quantitative responses in only one of the sections, with more qualitative-based responses required in the others. So let's unpack it a bit. As a starting point, Section B asks whether you have addressed any ATO recommendations, areas of low assurance, or red flags from your last GST assurance review. What does this mean? This could, for instance, entail GST governance recommendations, along with any other areas of low assurance or red flags, emerging from specific GST risks, things that may be more technically orientated in nature. Put simply, and I think this is the key message, this section is really important in that it provides a taxpayer with an opportunity to demonstrate to the ATO what action has it undertaken since an earlier review. Whether this comprises adopting recommendations such as uplifting governance, making a voluntary disclosure, or documenting the technical basis for a complex issue identified as a red flag, having a really clear, concise and well-articulated response backed by objective evidence is crucial. This is one of the key questions, which, going back to the point that Priyanka raised before, will likely shape and influence the scope and intensity of future ATO engagement as part of their differentiated framework. Touching on an earlier comment, it's also important for taxpayers to ensure that they have objective evidence on file to substantiate that a particular ATO recommendation, red flag, or low assurance area has been addressed, particularly given the ATO will quite possibly ask for this in a future review. The final point I just wanted to cover on was for those taxpayers who have an upcoming SAGAR filing deadline, who may not necessarily have the time and or the resources to address any ATO recommendations. For taxpayers in that scenario, it's still going to be really important to showcase what you at least plan to do post-lodgement. That is, to ensure that you've got a really positive narrative to share with the ATO, that you're taking the SAGAR seriously, and you've got plans to address, for instance, any GST governance uplifts. This, for instance, could involve sharing an action plan outlining the key items to be addressed and the estimated timing for the completion. So, Priyanka, with Section B covered, do you want to take us through Section C covering GST governance?
Sure. So Section C covers GST governance and is made up of 3 key questions. The first question asks whether there's been any material business changes or material system changes that impact the taxpayers' control framework since the ATO's last review. The second question asks taxpayers to look back at the state of their GST governance in the SAGAR period, being the last financial year, and compare it to the GST governance rating that was provided by the ATO in the report that they issued, and assess whether they have met or maintained that GST governance rating that was provided by the ATO. And the third question in this section asks taxpayers to provide explanations for that self-assessed GST governance that they've provided in the previous question. So, looking at the first question, it asks taxpayers to turn their mind to what is a material business change and a material system change in the context of their specific business and their specific system setup. So some examples could include the introduction to a new product or service line, an introduction of a new customer base or a change to an operating model. Some examples of material business changes could include implementation of a new ERP or a BAS reporting solution, as well as updates or changes to subsystems that are used to capture key sales and purchase transaction and other GST impacted data. So for taxpayers that have had one of those material changes, when looking to answer the other 2 questions in this section, it's important to turn their mind to what processes and controls have they implemented or enhanced to demonstrate that they have assessed and addressed all the GST risks that arise from this material change, and that these assessments have been appropriately documented. Looking more broadly at answering the self-assessment and the explanation question, a really useful starting point is looking at any GST governance-related recommendations that the ATO provided in the report that was issued, because they effectively provide insights on what the ATO is expecting you to do to be able to either maintain or enhance the rating that they previously provided you. And as Mark mentioned earlier, penalties can apply for making false and misleading statements, and these are regardless of whether a GST shortfall arises. So when undertaking the self-assessments, it's really important that you're making sure that you're doing enough to be able to demonstrate and evidence by way of objective evidence that you've taken reasonable care in undertaking that self-assessment and effectively disclosing whether you've maintained or enhanced that GST governance rating.
Thanks, Priyanka. That's easy. It sounds super simple. But I've been told that there is one section which is on everybody in the GST community's minds. Apparently, it's the GAT. Now, Mark, can you do 3 things for me, please? Can you tell me, what does the GAT actually mean? What does one have to do to fill in that section? And what can taxpayers do to make the section less painful?
Yeah, thanks, Stuart. And we do love an acronym in GST. So GAT stands for GST Analytical Tool. And so it's an annual reconciliation of your audited financial statements to your annualised BAS. And it's effectively a way to perform a completeness and accuracy check between your GST reporting back to your financial statements, and to identify if there are any differences between your GST reporting and your financial statements. You understand the reasons why. And so in terms of how you cover that in this particular return, if you've completed the GAT, then there's questions that you need to provide answers to, which are associated with the effective GST rate on sales, the effective GST rate on expenses, and the net effective GST rate. They're the only three numerical responses you provide in the supplementary return. Then you also need to provide a response for any of the remaining variances, the reasons for them. If you haven't undertaken the GAT, you'll notice there is also a question there asking you for the reasons why too. Whilst the GAT isn't a legislative requirement under the GST law, the ATO does expect that the GAT is undertaken on an annual basis, pursuant to Managerial Level Control 7, which is understanding documented procedure and having documented procedures for significant differences between your financial statements and your return reporting, which is a part of its Justified Trust program. Recognising the time-intensive nature of doing the GAT, my best advice is to start early. So don't wait until the first return is due to do it for the first time. I would recommend you start early, because if you do identify errors, you want enough time to then correct them so it doesn't impact the return. And then finally, just to assist taxpayers with undertaking the GAT, we have also recently created a technology solution that can help you with efficiently completing the GAT. And so I'll give you a quick demonstration of that now.
Our GAT solution is part of our PwC Tax Technology Suite, building upon the robust features of Indirect Tax Edge, our BAS automation software, to accelerate the preparation of your GAT. The GAT process entails a reconciliation of your annualised financial statements with the annualised GST on sales and purchases reported in your BAS. Traditional GAT preparation methods often employ a top-down strategy, beginning with the financial statements and analysing from the trial balance down to the BAS. However, our solution adopts a more dynamic hybrid approach that not only supports the conventional top-down methodology, but also enables a bottom-up review driven by actual BAS transactions. This bottom-up method offers increased insight into GST flows across financial ledgers, thereby accelerating GAT preparation through Indirect Tax Edge's transaction-based analysis. Under this hybrid model, if you're already an Indirect Tax Edge client, we draw upon your BAS data alongside your trial balance and financial statements to generate the GAT. If you are not yet an Indirect Tax Edge client, we simply integrate your BAS data, trial balance, and other relevant financial information into our system. We then collaboratively determine the preferred GAT category mapping level, whether that be at the general ledger account level, tax code level, or transaction level. Once mapped, the solution provides work papers for reviewing results, refine mappings where needed, and recording any adjustments. For example, you can see that the services revenue account has been mapped at the tax code level of GST-free sales to the GAT category of GST-free sales based on its BAS reporting, whereas other accounts such as intercompany are mapped at the GL level. You can then follow the data through to the profit and loss revenue worksheet to verify calculations, compare to prior periods, and add any comments for audit trail purposes. Upon completing these work papers, our GAT solution generates a final GAT output in the ATO format. You are then able to incorporate final explanations, review outcomes, and export into Excel. The ultimate advantage is a significantly accelerated GAT compliance process, enabling you to identify and address any discrepancies between your accounting and GST results promptly. In doing so, our GAT solution helps you more effectively meet the ATO's Justified Trust requirements, particularly with regard to Managerial Level Control 7, as well as the annual Supplementary GST return.
Wow, that is actually a pretty cool solution for a GST tax technology solution. As a GST expert, I understand that the ATO also undertakes GST data testing. How is the GAT different to that, Mark?
Yeah, fantastic question. So whilst the GAT adopts a top-down approach, which is financial transactions through to BAS reporting, GST data analytics focuses more on a bottom-up approach. So it's looking at your transactions for your sales and purchases and then seeing how they feed into the BAS. And so they both are complementary and they're not substitutes. So what does that actually mean? In terms of a top 100 taxpayer, you do need to do both. In terms of a top 1,000 taxpayer, it's traditionally only the GAT. unless you're in the business of predominantly making input tax supplies, in which case you'll do GST data analytics as a substitute, or if the ATO thinks that there's particular areas they want to investigate further, then you may need to do the GAP plus data analytics.
All right, so Priyanka and Mark, there's two more sections of the SAGA that we haven't discussed, and I understand these require you to look back at positions you've previously taken within the SAGA disclosure period, which is the previous financial year, and make certain disclaimers. So could you just walk us through those?
Sure. So Section E is asking about material uncertain GST positions that have been taken during the SAGA period being the last financial year. So it's really important to note that every single GST treatment that you apply or don't apply to a sale or purchase transaction results in a GST position being taken. These positions will need to be reported in your annual SAGA if they're material. So if you're a top 1,000 taxpayer, that means that the position needs to be $250,000 or more. And if you're a top 100 taxpayer, the GST position needs to be $500,000 or more. And if the position is uncertain. So this means that it needs to be likely to be as correct as incorrect, less likely to be correct than incorrect, or goes against some ATO published guidance. And this is even if the position is reasonably arguable. This section, in our experience, is really hard to prepare if you lack controls in place to manage GST risks, such as having tax risk registers in place or tax escalation policies, and you haven't actually tested the operation of these controls by way of either GST data testing or by way of undertaking periodic controls testing. Mark, did you want to take us through Section F, which is the last substantive section of the SAGA?
Sure, Priyanka, thanks. So the last section on the SAGA is Section F, and it essentially requires details of any material GST reporting errors or material input tax credit claims that relate to earlier tax periods to be disclosed to the ATO. So what does that mean? There's essentially two types of disclosures required of taxpayers under this section. The first disclosure relates to GST reporting errors. These are mistakes which basically result in paying too much GST, i.e. credit errors, or conversely too little GST, i.e. debit errors, within a 4-year period of review. And the GST reporting error becomes material, and hence it needs to be disclosed to the ATO where the gross amount of the error exceeds the taxpayer's materiality threshold for GST. The second disclosure that I referenced before relates to input tax credits claimed in a BAS lodged during the SAGA period, but they were originally attributable to periods prior to that period, and which arise due to a change in the underlying GST treatment. So an example might be applying a different apportionment methodology or rate, which gives rise to additional input tax credits. And once again, just picking up one of the themes that we raised earlier, it will be really important for taxpayers to ensure that the response they have is supported by objective evidence to demonstrate that you've taken reasonable care when responding to this question.
So that's the SAGA. Easy, right? So we've got a bunch of taxpayers who might be looking forward to having a GST assurance review or looking forward to how they'll comply with their SAGA obligations. Can I do a lightning round amongst the panel of what these taxpayers should be looking to do to comply with these obligations? Maybe I'll start with you, Mark.
Yeah, thank you. So no surprises on what I'm going to say. Just do the GAP and do it on an annual basis. Have your work papers that have all the detail there around your objective evidence and your explanations of any variances. Our GAT Accelerator solution can help you with all aspects of this, and I'll be more than pleased to have a conversation with you about it.
So I would say get on the front foot and start preparing early. I think don't wait until the initiation of a GST assurance review before you begin to prepare or uplift your GST documentation or starting to put objective evidence on file to manage any risks. Just bear in mind that once a taxpayer is notified of a review, they've got 56 days to respond, with extensions now becoming increasingly more difficult to secure.
Priyanka, best to last?
I would say invest in your GST governance, because not only can this impact the overall GST assurance you can receive from the ATO, but also it can reduce the amount of ATO recommendations coming out of the review, therefore reduce future work in relation to lodging your future SAGA.